Hello and welcome everyone. I'm Robert Baharian and this is Masters in Investing. They say life never stops teaching and we never stop learning. This show is my exploration with investors to both understand and unpack what is going on in markets right now and what this means for business and for investors. Please don't forget to subscribe and leave us an awesome review. Let's get into it. My guest today is one of the youngest multi-million dollar earning high stakes poker players. He's played at the highest level in Macau and ranked number 3 in Singapore's all-time money list. Poker player turned entrepreneur, investor, and my friend Wayne Yap. Today we discuss the similarities between poker and investing and what investors can take from playing poker. Understanding odds, controlling emotion, frustration, making positive expected value bets, and cutting out the noise and focusing on your strategy. I had so many more questions for Wayne, but for now, this is what I've got, and I hope you enjoy it. Hello and welcome everyone. And this is Masters in Investing. I'm Robert Baharian, and I have today with me a very special guest, one of the youngest multi-million dollar earning high stakes poker players, Wayne Yap. Welcome to Masters in Investing. Thanks for joining me.
Hey Robert, thanks for having me.
Wayne, you've generated millions of dollars playing poker, and I understand you've lost close to, if not $1 million in one game. You were playing at the highest level in Macau and are ranked number 3 in Singapore's all-time money list. Entrepreneur magazine said that your poker strategies will give your business an unfair edge and record profits and enable you to make difficult, high-stake decisions in seconds with limited information. And I want to talk about today, Wayne, the nexus between poker and business and investing. And I feel obligated to quote Warren Buffett when he says, if you've been playing poker for half an hour and you still don't know who the patsy is, you're the patsy. And poker is a game of such odds, and that's what you're playing. And I'm sure there's more to it, which I'd love to get from you and hear from you, Wayne. But investing is no different. It's understanding the factors that drive returns and playing the odds whilst investing as well. If you don't mind, Wayne, can you just give me a rundown, and for our listeners as well who don't or may not follow the poker scene, when and why you started getting into poker and why you got out?
Yeah, sure. Okay, yeah, you just open so many boxes. I feel like I can talk about so many things. But I'll start with the question you asked first. I started playing poker. I actually started taking it a bit seriously and picked up a book and stuff in 2007 when I was 17. Me and my friends just decided, we like to play poker with each other. We started playing for a few bucks. And yeah, I went down the rabbit hole. We wanted to compete and become better at it than each other. I quickly realized I was good at it. I had some natural inclination towards the strategy element of it, the game element of it, and the numbers element of it. So it's kind of played a whole bunch until I became good. I won and lost along the way. Eventually I got the highest games. I think there was a couple of years before I met you. And when we met in India at a meditation retreat / course type thing. So towards the end, I was really going down the meditation path and finding out more about myself. And I think we talk about our dharma in India. At a certain point, it felt like poker wasn't my purpose. It wasn't what I was meant to do. Because I learned a lot of things from poker along the way, but at the end of it, poker is still a zero-sum game. If I win, somebody else will lose. And that creates a dynamic where there's a certain ceiling to it. And it's just not there's no value creation, right? And is that a game that I really want to play forever? So my answer was no. So I give this analogy that I'm standing on one mountain and I realize that there's a higher mountain elsewhere, and I kind of know I'm done with this mountain. at some point I'm gonna have to walk down the mountain so that I can get to the other mountain and climb the other one.
Is that an issue for your? Does that hurt your ego, Wayne? That you have to climb down a mountain that you've spent many years climbing up?
Yeah, it does. I mean, up to this day, it's kind of like you still want to pride yourself for being like a very strong poker player. And sometimes I see friends who, they weren't anywhere near to where I am right in the past. And like right now, they're probably better than me. And I mean, they've been playing for a few more years and I stopped, right? So yeah, but it's it does hurt the ego to some degree. I mean, we were making a lot of money playing poker as well. So like when you stop playing poker, your lifestyle kind of has to cut. You have to spend a bit less, you have to be more cognizant about like where your income is coming from. Like I can't just like go for this $10,000, $100,000 programs like nonstop without thinking about it. So it sort of forces me to do a lot of inner work and understand that hey, it's valuable like living life like a more normal person in some ways. Like to actually have to think and worry about money.
What drew you into poker, Wayne? Obviously, there's tournaments all around the world with various prize money. What was it? The money that initially drew you in? What was that thing that pulled you into poker?
I mean, generally, like I really like math. Like I've always loved the math side of things. Like it was always my best subject in school. I always crushed it. I always loved games. And then when I found that I can play a game that's like math based and I can make a lot of money in and I can be good at, it's just like, wow, this is amazing.
And the money coming through after it all helped a little bit, I'm sure.
Yeah, I mean, to be honest, it was like one of the more important things for me. I mean, I didn't grow up very rich. My family was even having a financial difficulty.
Tell us about that.
Playing poker. Yeah, I mean, once like I was in the serving national service, I came back from national service, and basically, usually my parents pick me up from the airport. They say like, yeah, they can't pick me up. I took a cab back. I see my parents. My mom is crying. My dad is just like he's like sort of okay. We talked. Like they filed for bankruptcy. So yeah, I mean I think it's a very shameful thing, especially for Asians. It's like because we care so much about our face because of like I'm sure you understand the Asian culture pretty well. So yeah, and because of that, right? Like that was the point where I started making some money in poker. I could help them out a little bit. I could give them some money, and that really drove me to want to make money.
And
so
was it trying to get away from what your parents went through and that financial hardship? Do you feel as though there was an element of wanting to not have to be in that situation again that also maybe drew you towards poker? And I'm just curious whether or not if that didn't happen and your mum and dad came to the airport like they normally do, picked you up, whether you would have had that sort of pivotal moment where you may or may not have embraced or pursued poker as much as you did.
I mean, I was already at that time like pretty. Yeah, I mean, it's not like I went from having a lot of money to no money suddenly, right? It's like my family was already struggling financially over time. So like, I don't really think it was like that one moment that changed things. But like the fact that they weren't doing well and me being driven to not have to live through that again, I think that really came true to some degree.
So I feel like poker, and look, I'm a poker fan. I enjoy playing casually, nowhere near the levels of where you've been, Wayne. But one of the things I do know is the level of emotion that is involved in poker, the calm that one needs to have, the resilience that one needs to have as well. I feel like there's so many similarities between poker and investing. And one of the things that you're doing now is you are an investor, you advise companies as well. Do you want to give us a quick rundown quickly about some of the other things that you're doing now, with Life After Poker?
Yeah, sure. Okay, like you're opening two doors too. I feel like you opened two paths again.
Pick one, Wayne.
And you want me to talk more about that? Huh?
Yeah, just give us a rundown of what you're doing at the moment, because I'm then really curious as to what poker taught you and what you've learnt from poker as it relates to now you being able to excel and help your clients with the work that you're doing.
Yeah, sure. Okay, so I'll just kind of give the overall picture a little bit better. When I left poker, I mean, at that time I was holding a lot of Bitcoins. And at the end of my poker career, like I was like most poker players were really into it. It was the last bull market. So firstly, I spent a lot of time there, and that's a crazy journey. Made a lot of money, lost a lot of money. Came to a point where the market was down a lot. I was like, hey, at that point I realized like I was in crypto mainly for the money. Like I didn't actually have a lot of personal interest for it. So I decided that okay, I'm kind of at a crossroads. Do I go back to playing poker, which I didn't want to do anymore, or do I start something new? So I figured like yeah, I'll just try and experiment starting new things. So that was when I started my first podcast. It's not around anymore, the podcast. I sold some online course. I did some coaching, traveled around going for a lot of masterminds, meditation retreats, courses, business, marketing, a whole bunch of things. So along the way, I picked up a few coaching clients, like personal development, life coaching type. I thought that was fun, so I did that for a bit, realized it wasn't the right fit for me. Then I did some business coaching or consulting. Did that for probably 6 to 9 months, had some successes there, and then I realized like, actually I want to own equity positions instead. So like I started looking for more investment positions and more acquisition deals. So right now, I actually have like between 6 to 9 in my pipeline, depending on like what kind of stage they are. 2 that are really close to completion. So yeah, it's just like a lot of interesting things coming together at this point. The projects like synergize well together. There's like very low hanging fruit that I can. Because now when I come back to the investing in businesses, like my strategy is really to look for businesses that need what I have. Like I can go to and look at a business and be like, oh yeah, their marketing and strategy and their pricing stuff, like it sucks. Like if I come in and I change that one bit, it's gonna like go from losing to become profitable. And I kind of start like looking at my confidence interval for that. I started thinking about like, okay, what's the probability that I can do that? What's the expected value when I take something like that? And if I think about the highest expected value spots, it's usually going to be companies that are slightly losing, but there's lacking 1 or 2 things that can make them relatively profitable. So I feel like that's the places that I can make the best bets. So that's what I'm.
And what are some of the things that you've taken from poker into the world of business and the world of investing? What are some of those characteristics, traits, or muscles you've built over the years playing poker?
Yeah, there's a ton of them. I think the biggest one is probably like your decision making kind of like you have some heuristics for how you make decisions in poker, in life, in business. You kind of like it's a lot easier for you to have heuristics so you can make quicker decisions. So that's one. I think second is just understanding mental models. So really understanding. Maybe a third one is understanding how systems interact with each other. Like understand that you can kind of look at one thing as it is. You can kind of look at one thing in how it functions as a system. You can look at how one system interacts with another system, like either bigger or similar size. So that's useful. I think the whole mindset thing is something that if you played enough poker, you've been through enough ups and downs, then you start learning how to handle. You kind of have to go on with life when you lost like $500,000 that day, right? So like you lying in bed or you don't want to do anything, you just want to eat ice cream and not do anything, but you sort of yeah, you sort of get over it. And the more times you get over it, you build that muscle up as well. Um,
Because
and yeah, I mean, there's a whole bunch more. I think the biggest thing for me right now, personally, is like listening more to my intuition. And I know your wife is like super big into that. And um, I guess you would be to some degree as well. I've never really been an intuitive poker player. A lot of my decisions are just like based on math, based on logic. Because you kind of, if you study the game enough, you sort of have this like close to correct answers, or what we call game theory optimal solutions for a lot of things. But when I started leaving poker, I started doing more meditation, I realized that the body knows so much. Like we have a lot of knowledge and information about like, especially when it comes to like what kind of food we want to eat, or like what kind of like what's good for you, what's not good for you, which direction to pursue, or which direction to go down when you are deciding on your career. Then I realized that like actually, even though I wasn't actively doing it, I was sort of like honing that skill along the way, because we are making decisions based on being around other people, right? Understanding their thought process, empathizing with them. So I think that's sort of a skill that I've picked up in poker. I mean, I can go on and on. There's like a
do
whole
you
bunch.
feel like, Wayne, you talk about intuition and you talk about relying on your intuition more to help you make business and investing decisions. And you said that you weren't really an intuitive poker player. If you had the skills that you have now and knowing what you know now, and if you wind the clock back 5 or 6 years and you're in a casino in Macau, do you feel like you would be making different decisions and play differently?
Yeah. I mean, I kind of still have to sort of reconcile the intuition part and put it into poker, because it's sort of, I mean, I've tried playing a few poker games with friends and stuff, but it's not like a direct one-on-one mapping thing when it comes from it, like intuition in life and then intuition in poker. Because it's a weird dynamic in poker where people are always trying to conceal. They have concealment strategies, so it makes it a little bit trickier. You really have to dig into the nuances of like, okay, a concealment strategy is something like if somebody gives a poker face, and or somebody's like using their hands to cover their mouths. However, there's still this like micro movements, like is my hand placed directly on my mouth with my palm on my mouth, or is it like placed slightly off at a certain angle? And then like how's the breathing rate there? How's the energy levels in when they are concealing? You sort of have to start building like almost like a baseline for them before your intuition comes into play.
And given that poker is a game of, you said before, it's a zero-sum game, and I feel like investing is no different. When you're investing, if you're investing in the stock market, for example, someone is buying and someone is selling. And so for every winner, there is a loser. How do you gain an edge in poker, Wayne? And then in business, how do you translate that edge into business? And do you think it's the same thing, being able to have an edge in business and investing and in poker?
Yeah, I mean, I think there are very clear things that gives you an edge. So like being able to make plus EV bets is an edge. Like in poker, it's like the game is all about putting yourself in positive expected value situations. And when you're investing in the stock market as well, like you just want to put yourself in positive expected value situations. You might still lose money with any investment that you make, any stock that you buy, but there are certain things that you can do to understand like future trends or understand macro economic stuff. You can understand like technology development, and you can put yourself in situations where you can make plus EV bets. So I think that part is kind of similar. I would say that like at least the stock market has certain factor of value creation more so than poker. Poker, like in my opinion, is like clearly a zero-sum game. If you win, someone else loses. In stock market, yes, some people might lose as well, but the market can go up as a whole, so the pie is growing. We can also argue that when you're investing in stock market, you are helping capital to be allocated efficiently, and like putting the right amount of capital to the right business so that they can do cool things with the capital it's a pretty value creating proposition. It's not a direct, like, you're investing and then now you're creating value. It's like a secondary effect, and I kind of see that quite clearly. I choose to spend more time thinking about small businesses just because I feel like the impact of my money is a lot higher. So that's kind of the path that I sort of chose, because I walked away from poker wanting to create value, and I felt like that was the most direct path.
The game of odds in poker and the game of odds in investing, how did you manage risk while playing poker? Because the odds are not in your favor. The odds are in the favor of the casino. And interestingly, and I'm really curious about this, the longer you play because a casino wants you to play for longer. You might win one or two hands, you might win big, but if you keep playing, the odds are stacked up against you, which means the probability is you're going to lose. But, you know, having spoken to you and listening to you speak, you talk about playing poker for long periods of time. And
I mean, I just kind of cut you out here because
Sure.
like the first thing we must get clear is that when you're playing poker, you're not really playing against the casino, you're playing against other players. The casino takes a piece of the pie.
Sure.
So like they take rate from the pot. However, like if I play against you in a casino, right, and the casino takes like 1% from my winnings, like on average, if you play unlimited number of hands, I'm probably gonna beat you because I played like a lot more poker than you. So like even if the casino is making money there, it's fine for me because like I'm still gonna win you at a bigger rate than the casino can win me at on average.
And so how do you manage risk?
I mean, we have bankroll management strategies, and there's like Kelly's criterion. Maybe you heard of that. It's like managing a risk of ruin. So if you can understand in a mathematical sense, right, there's an optimal amount to make every bet if you understand what kind of probability you have for winning, and then you can calculate the variance, calculate the standard deviation. So you sort of like, because let's call it you have $1 million. It's probably not optimal for you to put in $1 million in one game of poker, even if it's like the best game for you, because like if you lose off that million, then now you lose the opportunity to make money. So what happens if you have 90% chance of winning that? Like, so like if I bet 1 million and I have 90% chance to win 1 million or lose 1 million, is that worth it for me to take? So like, if you are thinking about optimizing, if you're looking about it from a positive expected value situation, then yes, you are supposed to take that bet. It's like going to give you a huge amount of expected value, maybe even like 800K of expected value. But if you are thinking about optimizing for the long term, you probably end up making maybe a 200K bet, because a 500K bet, you'll bet half all the time, especially if you can bet an infinite number of times. So like you start kind of thinking and you start looking at like how comfortable you are with risk. Like are you gonna be mentally okay the next day if you lose like half of your money? I mean, for most people the answer is no. So you probably can't do that. Are you gonna be okay with losing 10% of your money in one day? Some people like me, like I'm pretty comfortable with that. I mean, it's not fun, it's a bit painful, but yeah, it's happened a bunch of times in my career. Even like 20% of my money. So you start thinking about like what's the risk tolerance level that you have, and how far can you push it if you know that you have an advantage.
Yeah, so understanding your personal risk tolerance, even though probabilities might be the same for the same people, your own emotion, and when you've got a $1 million pot sitting in there and you're all in, and you've just bet 500K, like you know. I like, how do you feel at that point in time how did your stomach feel? Is your heart racing? And how do you keep calm and manage your emotions in that situation? Because in investing is the same, right? Like you've got investors who might invest in the stock market. And, you know, during COVID last year, the market's down 35% in a matter of days. And then people are pulling money out at the wrong time. The stock market then quickly rises, and it's just this whole roller coaster of emotion. How do you keep that in check?
Mm. So when it comes to playing big pots, you kind of like get used to it over time. So like I like to say that the first time you bet $1,000, it's always gonna be hard, no matter what. Like then like after you do it a few times, it kind of becomes, it normalizes. The first time you bet 10,000 is hard. The first time you bet $100,000 is hard. And like I mean, the bigger pot you play and the more times you do it, you kind of get used to it. So I imagine for trading and stocks and stuff, it's sort of the same thing. Where if you're making $100,000 investment in a stock, like maybe the first time is like really intimidating and really hard to do, but after a while you kind of get used to it. However, like in poker, the feedback loop is much shorter because you play a hand, it's over, it's the next hand. In investing, COVID, like it happens like once, like that down 35% doesn't happen very often. So like I don't think kind of I mean what I guess like what I'm saying is that you are gonna feel some anxiety, you are gonna feel some like shakiness and like some worry and start thinking thoughts about like, oh, what happens if it all goes to zero or something, or like you lose a bunch of money for your client and the market doesn't recover and then now your business is ruined. Like we're all gonna have those thoughts, right? It's like I mean, me and you, we learn a lot about like not obsessing about thoughts. So it's okay that we think that. It's like how can we just like focus on the present moment and tell ourselves that like, hey, there are certain things that are not within our control, and there are things that are within our control. What are the things that are within our control that we can actually put our focus into to make better decisions?
Yeah, I'm so glad you've brought that up. It's something that we talk to investors about all the time, which is focusing your efforts, energies, and decision making on things you can control. Understand the things that are out of your control. Understand what the spectrum of outcomes are and what the probabilities of those are, so that we are aware and we understand what some of those things might be. We never know when they're going to happen. You might play a hand and you've got pocket aces and you get totally burnt on the river, right? The odds are in your favor the whole way in, and you just get totally burnt on the river. And then I guess one of the questions I had, but I think you've probably answered it, but add anything to it if you feel like you haven't. Frustration, which I guess is an emotion, when you feel like you're doing the right thing and you're following the process that you know is the right process, but it's not yielding results. And you begin to maybe question the process, you could maybe question the methodology and what you're doing. How do you keep that in check, and how do you manage frustration? Is it the process? Is it your emotion? How do you manage that?
I mean, I personally, like, I have kind of like things I tell myself in my head all the time. So for example, like one thing I think we must realize with a lot of things is that we live in a exponential world. Things are generally going to be exponential in nature, but as humans, we think very linearly. So it's like for us to get from 0 to 1, like what we think it will look like is it goes from 0 to 0.1 to 0.2 to 0.3, and then you just like all the way until 1. But in reality, it's more like 0.001, 0.002, 0.003, and then maybe at some point you start doubling and then you reach like 0.1, and probably like you have to put in like 80% of the work even before you get that 0.2, the first 0.2. And so like you kind of got to be aware that, yeah, like most of the results you will see will come later. And this is, I mean, in investing, and this is an investing podcast, I'm sure that everybody knows about compound interest in investing. But like compound interest is there for any new project that you take on as well. You have to put in the work first. When it comes to relationships, these things are compounded over time as well. Things are all like exponential in nature. And I think when you can really, really deeply understand that, then you can more easily kind of play the long game and push through certain frustrations when it's hard. And yeah, the people talk about a dip, right? Or like something having a dip first before it goes up. Like when you go into a new field, like if you're investing your own money for the first time yourself, you're probably going to make some mistakes. Of course, you can get lucky right off the bat. But like, let's say you do some business, you probably have to invest time, money, your own sanity before you start having success later.
And thanks for clarifying the odds with the casino and poker players, because in poker you are paying, you and I are playing, and the casino always wins. They just take a slice of the pot every time. So they're bringing money in. The longer you and I play, the more money that you keep making. And so I'm really glad you touched on the concept of playing for hours and hours and hours on end. I don't think people appreciate, in poker you're playing for 10, 15, 20 hours. And when people come to investing, they want the same thing. They want to win the big pot with the first hand. But as it relates to poker and as it relates to investing, do you think that there are more similarities as it relates to long-term playing the game for the long run in poker and investing for the long run? Because you talk about exponential growth, you talk about compounding. What advice would you give to investors who are so focused on the short run that they drain all of their energy and focus in the short run without taking the long term into account? What's your advice for them?
I mean, I would say that the most important thing when you make an investment decision is to understand what's the expected value and what's the kind of like the duration for how long you need to put your money in to achieve the expected value. And like, there is probably going to be nothing that you have an expected value of 100 times, right? So if you keep going for that big 100 times thing, like it will happen at some point, and it's probably going to be a combination of luck versus like timing, but you can't really control that. All you can control is like how do you put yourself into favorable spots and play an iterated game with that. So like, and what I mean by playing an iterated game in this situation is like making better decisions. You invest in a stock, and that's the first game that you're playing. But then like, what do you do after? Do you kind of sell that stock and buy something else? Do you buy into a fund? What do you do? Like, and the more you can put yourself into positions where you're making that plus EV bets and you're iterating over time, improving and having more samples of that, like, yeah, the better it is for you. The poker equivalent would be like, if I find a player who's willing to play with me and he's worse than me, how do I put myself in a situation where I can play with him multiple times over the years instead of just like trying to win everything once? Like, I mean, the guy is not going to lose to me 10 million in one day, for example. Like, if we play today, like, and I beat you, you're not going to like lose 10 million to me. Like, like, why would you do that? But like, if it's over a period of time and every day I'm winning $10,000 from you, maybe it's possible. Like, so like, how do you kind of put yourself into those kind of situations?
It's almost like understanding the rules to the game and understanding how to play the game, whether it's poker, whether it's investing. That it may be that in the short run and over a few hands, you might lose. So over a few days, you might lose. A couple of months, you might lose. But it sounds like the longer that you play, having the skill, the knowledge, the experience that you have, whether it's playing poker or whether it's investing, the more you have that and the longer you play, the odds start getting stacked up in your favor and not your opponents. Do you agree with that?
Yeah, I mean, you can see like if you have a positive expected value and then you think of a normal distribution, you draw a graph, the graph kind of shifts to the right. If right is positive. So like, yeah, I mean, you can still be on the left side of the line of zero and be losing, but then like the chances of that, like you need to be like, many standard deviations away from the mean for that to happen. So it's all about like putting yourself in a situation where you're always making this plus EV bets, and yeah, you will win in the long term.
What do you think the biggest blind spot is for businesses that you deal with and investors that you deal with? What's their big blind spot?
I think a lot of them aren't really able to think multi-dimensionally. So they think of things very like one step. Like if they're thinking about, okay, like a business that I'm acquiring right now, they do like facials and eyelashes and eyelash extensions and eyebrow embroidery and so on. There's a whole bunch of services, right? So like what they do is they do a $28 trial. You come in, you get to test these things out. And then when you come in, they try to like hard sell you a whole bunch of other services. Like, oh, you can like, oh, this facial, you need to add this extra cream, you need to use this extra technology. It will come out to be $170. And like they think like, oh yeah, they're kind of smart. They put $20 to draw people in, and then they like hard sell stuff. But then like you sort of have to think about things from an overall big picture context. Like what's the experience like for that person now? Like is this gonna make them likely to become a long-term client with you? Like people are so focused on the short term, like, oh, I just want to milk out as much money as I can. And they don't understand like, hey, maybe it's like we charge them $28, but instead of giving them that experience, we over deliver on what they might expect. And now they're like, wow, this place over delivers. And then you get like a higher lifetime value. Like I think most businesses, they can't really look beyond the like that one day.
Which is almost like, you know, we talk about investing, and people get so caught, especially if you haven't been investing for a long period of time. And you said before, you invest your money and day one or day two, you're just losing. And it's being so focused on that. Again, I think it goes back to understanding the rules of the game, understanding the game that you're playing and what it takes to be resilient and endure that whole process, because it certainly is not one game, one hand, like it is in poker. Business is not about one day. Investing is not about one day. It's about months and years and years and years and decades. I want to, you've mentioned personal development quite a bit, Wayne. I want to talk a little bit about that. But before I get into that, I'm curious, failure as a concept in poker, and again, relating it back to investing, how do you get up from that? Because I'm sure hand after hand, day after day, there would have been instances where you're constantly losing. And again, you might be still mathematically doing the right thing, but you know, you might have 90% odds, but the 10% of odds came up 6 hands in a row. So that failure or losing $1 million in one game, I've got no idea how and what that would feel like. But how do you get up from that and play the next game? Because with investing, Wayne, what happens is, and we see this a lot, and I'm sure you would, when investors fail or business owners fail at one thing, they are so clouded by that experience, they don't go back and do that thing again. So for example, I might go and invest in Bitcoin and the price collapses and I just lose a lot of money. Or I invest in a mining company, it collapses, I lose a lot of money. Investors then turn around and say, well, I'm not going to invest in mining companies. You're going to have a really bad experience. But if you turned around and said, I'm not playing poker again, I just lost $1 million, then you wouldn't be where you are now, and you wouldn't have won that $1 million back maybe two hands later or 2 weeks later. So how do you get back up from that?
I mean, it's hard. You really have to believe in your own judgment, and you have to believe in your own ability to see beyond your own cognitive biases. Like, you're going to be biased towards something when you have lost a lot of money in it. If you invested in Bitcoin and you lost 90% of it, or like you invested in the last ICO run and you lost like 90% of your money there, it's going to scare you away from crypto. But like really at that point, you kind of have to look at it and think, am I making this decision because of my own biases and because I lost something? Or is it like, I'm not making this decision because I think it's minus EV? Like, do I actually think it's still profitable to be in this? And like, how can you separate that from the actual thing that has happened? I think poker kind of helped me to do that. I mean, we go through so many failures, we lose so much money. Like, there's so many times, like, I remember like sitting up at night, like losing a whole bunch of money and losing for months and just like Googling and asking, like asking Google and looking at what other people say in the forums about like, how do you handle downswings? What do you do when you keep losing in poker? Like all of those things, like, I mean, even after playing for years, like you still wondered about these things. And like how I kind of resolved that in some way, like I got a lot better at handling over time. It's just like reading books. Like if I read like Man's Search for Meaning, Viktor Frankl, like that kind of book, right? You realize that like, hey, people can handle like the worst of the worst of the worst situations. I'm much better off than them. I mean, even if I lost half of my money, let's say I have $1 million and I lost 500K in one day, it's going to feel like really miserable because there were so many things you could do with the money. You had all of these plans for this money. Like, but at the end of the day, Like, I'm still going to be in the same bed. I'm still going to be in the same house. Like, my life isn't really that different from an absolute standpoint. Like, 500K and 1 million, my life isn't really going to change that much, but it feels so painful. And you just kind of got to get used to it and just realize that, oh, the faster I can get up, the faster I can make positive expected value decisions again, the faster I start making money.
That's a really good point. And I think at the beginning when you were answering that question, there's a lot of self-awareness that comes in it. So being aware of your biases and being self-aware and pulling your ego out of it, and maybe even acknowledging that you made a poor decision and it wasn't mining companies, it wasn't crypto, it was maybe a negative EV decision that you made. And having that awareness to acknowledge that. Do you feel like, and you talked about reading books and jumping online, how do you do this? And do you feel like you were looking for some sort of validation to either validate the decisions you made or find something else that you should have done? Like, were you looking for some sort of validation? Because you said before, like, our bodies and our intuition knows, and we know the answers to a lot of these things. I'm sure you know this, Wayne. Why do you felt like you had to resort to hearing other people's opinions about what you did?
I mean, I definitely like when I started playing poker, like validation was a huge need. I mean, I still need it now. I think most humans need validation.
Why do you think we need that?
I think it's like we spend most of our lives craving approval from our parents. We want to be validated by our parents. I know I spent most of my my childhood being that way. And it's kind of like, yeah, I mean, I guess if we don't get validated and people don't like us, we don't get food, we don't get shelter. So like, I can see how it's like a mechanism that started from how we were young.
For those that don't know, Wayne and I met in rural India at a philosophy school, and I don't know how long we were there, a week or something, Wayne. One of the things that you taught me, and I don't think I ever told you this, maybe I did. It was day 3 or day 4, and getting really deep into meditation. That was the first time I'd done something to that level, going to India and going to a philosophy school and spending a week and a bit there on campus. And it took me 3 or 4 days to really get deep and connect with myself. And I don't think I ever thanked you, but I remember I was telling you about my inability to do that, and everybody else was getting there and was able to connect, and I couldn't. And I remember saying to you and just sharing with you my difficulty, and I found myself blaming something. And there was one of the Malaysian guys, and Wayne's kindly enough. Wayne's in Singapore. Wayne lives in Singapore. So Wayne, I didn't thank you this earlier, but thank you for zooming in now. One of our Malaysian buddies, he would always end up snoring when we were supposed to be meditating. He'd fall asleep and snore. You remember, right?
Yeah, I remember.
And I felt I could never just hit that spot and just connect. And I would blame him that his snoring was so loud that I couldn't cut out the noise. And I blamed him. And I talked to you about it. And you said to me, one of the things, Robert, I learnt during poker, playing at the levels that you played at, playing high stakes poker, is your ability to be able to cut out the noise with what is going on around you and being able to focus on yourself and what you're doing. And that was so profound for me, because that afternoon I was far more aware of it, far more conscious of it, and I was able to then go on to have a much deeper journey than maybe I would never have. So I want to thank you, man, because that to me, you might just have felt like that was just some, just a passing comment, but to me, it meant a lot. So thank you for that. I really appreciate that. And it's made an immense difference for me. So I'm then curious, how do you cut out the noise, Wayne? Is it just being able to just be conscious of that fact that you are allowing noise to interfere with your own mind and your own decision making, whether it's poker, whether it's investing, or whether it's meditating, whatever you're doing? How do you, Wayne Yap, cut out that noise?
Yeah, I mean, I try my best to cut out the noise. I'm not always successful as well. And there are certain things like it. An example I'll give is like, let's say you wake up with a really bad neck pain, and all of us has had that at some point in our lives probably. Like, there is that noise. It's probably going to affect your ability to make decisions. But like what I tell myself is like, okay, like everybody's going to go through this at some point. Everybody's going to have that snoring person in your meditation class at some point. Like, it's not about that. It's about like how my ability to handle that situation and my ability to use that as something like a tool instead of something that's bad for me. Like if the person is snoring, I kind of try to reframe that and see it as something that, hey, like this allows me to deepen my practice even more because now I can do that meditation despite having that snoring there. And like the moment I kind of reframe that and I see that as, hey, maybe I'm just like dancing with this snoring thing. Or like if I have a neck pain, I'm like, okay, like maybe it's a sign that I need to go for a physio. I need to go and get my whole body and put it into a better state and recover better. And just kind of like accept the fact that I have to change some things. There's some things that I can't change, but like, what's the best thing I can do for myself in that situation, despite like everything that is happening in the environment?
I think that's some really good advice. And I think about investors who might jump in at the very worst time, and the following weeks and months they just endure great anxiety and great pain, seeing their portfolio fall from $1 million to $700,000, and there is no light at the end of the tunnel. But knowing the game and understanding the game of investing, understanding markets, you talk about betting bigger and building that muscle. I think investors can reframe the fact that I'm losing money, that I'm now learning and having an experience really early on in the piece when this may have happened 3 or 4 years down the track. And it's an opportunity for me now to learn, understand, manage this experience that I'm having, because this is helping me become a better investor for the next 5 or 10 years. What do you think, Wayne, it takes to go from amateur to pro, both in poker and in investing?
I mean, so multi-dimensional. There's so many things that you need to do. I think firstly, you have to really, the mindset element is really important for you to kind of make the decision. I think first it starts from making the decision to go pro, making the decision to actually be good at what you do. And once you make the decision, then there's like this like little pieces of the puzzle that you must put together. So one of them would be like fixing your mindset, for example, understanding like making positive expected value bets that we talk about, understanding that you're going to lose sometimes, but then be okay with that. I think another part of it is playing a lot of iterations of the game, doing it many times, gaining experience. I think when you make the decision to go pro as well, like you probably have to spend a lot of time studying to some degree. Like you need to, I believe in front loading the studying if you're new to a field, especially if like you're starting something. Spend enough time getting your foundations correct, having the basics, like go to the absolute basics of like how money works, for example. That's kind of like how you would actually get better at making decisions, because like if you want to go into investing, you got to understand like what is this thing called money, like how is this thing being created, why is this even something in the first place. If you can't understand it at a fundamental level, it's like it's going to cloud your decisions. Like you might take advice from somebody else, but then like it's only, you don't understand why they're giving this advice, and it's a timing thing, it's a context thing. So like I really believe in going to the absolute basics, which is going to be like math. It's going to be like some maybe basics physics, like things that you just like first principle stuff that you can't deny. And a pro would definitely do that instead of like just the amateur would take somebody's advice. They would listen to somebody's stock tip on the podcast and then just go and buy it. Like, oh, buy Tesla or go and buy Bitcoin. But it's really hard for you to make a lot of money in the long term and to keep making correct decisions if your decision to buy a stock or to do an investment is not grounded in the truth or in like first principles.
Yeah, I think we've all been there and done that. And I sort of think about you playing, you may not have the best hand, but you see the pot getting bigger and bigger and bigger. And, there's an element, if you are not grounded and you don't stick to your rules, I can see you starting to get very tempted to go and play that hand or go buy that stock, even though the odds may not be that favorable. You may have a poor hand, or you may not understand the business or the company or the stock that well, but this thing is getting bigger and you want a slice of it, whether it's Tesla, whether it's Afterpay, whatever, Bitcoin, whatever it is, right? We've all done it. And we do have human biases. Even me personally, right? I understand all of these things, but when it comes to ourselves, having that self-awareness becomes very clouded. You sitting here and you want to make certain investment decisions, I could probably pick up why you're making some of those decisions. But if I sit there and going to wanting to buy Afterpay because it's gone from $9 to $140, like, am I just jumping on the boat? Am I jumping on this bandwagon? Has it already run? Is it positive, negative EV? I think we probably know all the answer to that, but this element of this fear that we're missing out on something that everybody else has got a stake in starts to really challenge and poke at your decision making. I want to wrap up with this, Wayne. Your last book that you wrote, number 3 was Close Call. It was a top 8 tips for business owners from poker. And I'm just going to read this, man, and I want you to explain this to me, please. Number 3, close call. You have a close decision to make. Pick the option that has more perceived short-term pain. We tend to do more to avoid pain than to feel joy. And our brain typically overcompensates for short-term pain. This bias can make decisions feel harder and closer than they really are, which in turn can cause you to play small. With discipline and repetition, your sense of risk is reduced. Can you explain that to me, please?
Yeah, I mean, I think like if we look at ourselves, if we analyze ourselves, we start realizing that we are often in a spot where we are having a trade-off between a decision for the short term and the decision for the long term. Like an example would be whether you have that beer and fried chicken, or do you kind of pass on that and have a healthy meal. And it feels very close at the moment because like you're like, hey, there's a lot of short-term pleasure from getting the fried chicken. But like actually a lot of these things, when you look at it clearly, you start realizing that your mind is just like overcompensating for the short term. In poker, it's very prevalent because there's a lot of situations where you want to make a certain decision. You want to go home, for example, but it's not the best thing for you at that moment. You want to make that call on the hand when it's actually a losing call because you want to see the other guy's cards. So like the more you start kind of flexing your muscle to choose the long term over the short term, the better you get at choosing the long term, because like it's sort of like it's a spectrum as well, but then like you sort of get better at it over time. I don't feel like I'm explaining this very well, so maybe I should use a different example. It's like if you are gonna walk away from your job, for example, and let's craft a scenario where you already have some money saved up. Your job is relatively well paying. You can choose to quit your job to become a full-time investor. And in that situation, sometimes like losing that sense of security for yourself in the short term is just so painful. And when you are at that crossroads trying to make the decision, like ask yourself, like, what feels much more painful in the short term? Am I making this decision, or am I kind of, when I'm analyzing A or B, which feels like it's more short term painful? Because when you can be clearer about what feels like it's more painful in the short term, that's kind of the path that you need to go towards. Because our brain has so many biases, and the short term biases is like, it's just so strong. It's just like hard for us to. I mean, like, I think if we go back in time, we probably are very incentivized to make short-term decisions. Because if we're running away from a tiger or a lion, or we're eating some fruit in the jungle, we probably have to make short-term decisions. So like, we sort of like evolved, at least a big part of our brains is evolved to do short-term thinking. But like right now, the world clearly rewards you for making longer-term decisions.
Yeah, I think it's having what you're saying makes a lot of sense, and we are wired in a way whereby our mind does tell us to opt for the short-term pleasure rather than that short-term pain, and it's just having that awareness and the discipline to be able to understand what it is you're giving up or getting yourself into, and what the trade-off is. That's really what it is. I want to finish up, man. I know you've got things to get to, so I really appreciate your time. What's your biggest regret in your poker career?
Well, I mean, the first one that comes to mind is like quitting at my absolute peak. Like, I was playing the biggest games. It was really hard to get in, paying like $100,000 buying games, and I could have made a lot more money if I stayed on for another half a year. And yeah, that's sort of I mean, I have to walk away at some point, but I think choosing to walk away right at my peak, right at the top, isn't really a very smart decision. Because I could kind of milk it for another few $1 million and then walk away. Yeah.
What was it? Were you giving up? What was it you felt like you were giving up, flying from one country to the next country to the next country within 24-hour notice, being in, I don't know, whether you're in the Caribbean or whether you're in Macau or wherever you are, flying here to there? Like, what were you giving up for that?
I mean, you give up like relationships, you give up your friends. Like, it's hard to really. It's like everybody knows, like, hey, like I'm back in Singapore, but like if I know that this guy shows up in Macau, I'm off on a flight to Macau. Like, I mean, if I was hanging out with friends and I had dinner plans or whatever, like, I mean, I would just like, oh yeah, I'm going to Macau. Games are too good, I'm gonna make some money. Like, you start rationalizing that, like, okay, is this dinner worth to me the $200,000 that I'm gonna make on average when I fly to Macau? Then you start thinking, oh yeah, it's not worth it. I'm gonna make my decision based on the short-term money.
Wayne, I've loved talking to you about this. Thank you so much for joining me today. I do really feel as though there's so much more we can talk about, and so many more rabbit holes we can go down to understand the learnings and similarities of poker and business and investing. But I think we'll wrap it up for now. Thanks again, Wayne, for joining me. I hope we chat again soon.
Yeah, thanks. I appreciate you, and I appreciate you having me on the show.
Appreciate it. Thanks, man.